Okay, traders, in this video, I'm going to talk a little bit more about put selling. You know, here, when I make these free YouTube videos, I talk about selling put options probably more than any other subject or topic because, in my opinion, it's probably the greatest option trading strategy ever. So I really talk about it a lot, and I get a lot of comments, a lot of nice comments from people here who watch my videos. But today I want to address some of those other comments from people that come at me in these videos trying to tell me that selling put options is just super, super risky. It's a bad way to trade. They're telling people not to listen to me, not to trust me, and they're thinking that it's just an extremely risky type of way to trade options. And so what I want to do in this video is once again kind of go over what put selling is all about, but I also want to address some of these comments and some of these concerns that people keep coming at me with. If you read some of the comments that I get on my videos, and you can go back and read them, I keep most of them there. Some of the ones that are junk about spam and all this other crap, I get rid of those comments, but I keep all the other ones. So you can read what people are saying to me. So I want to address some of those comments about people who think that selling put options the way that I'm showing in these videos is really bad and really risky and that you really shouldn't listen to anything that I say. All right, so let's just jump right in here and talk about what put selling is the way that I'm talking about it, and then I'll address some of those other concerns and comments that people are coming at me with. All right, everyone, Lee Lowell here from smartoptionseller.com. So I talk about selling put options more than anything else. Over my 30 years of being in the business, this is the one strategy that I use more than anything else because it is that great. Now, selling put options, for those that might not know, is a very simple option trading strategy. It's a bullish trading strategy, and what you see here in front of you is one of our cheat sheets. I'm going to go over, what's put selling about a little bit, and then talk about some of these comments that people are saying. When you sell a put option, you are selling that contract to somebody else. Now, if you're just shorting the contract, it means you don't have to own that put option first. Okay, you can just sell that contract, that put option contract, without ever owning it, and you're just like creating it out of thin air. And it is something that you can do in the financial markets. You can sell something as the initial position. And when you sell something at one price, the hopes is that option price is going to decline, so then you can buy it back at a cheaper price. It's the reverse of what most people are taught to do. Most people think you have to buy something first, it increases in value, and then you sell it later to lock in your gain. We as option sellers, what we do is we sell something first, we wait for the price to decline, and then we buy it back. That's how we make our money by being option sellers, or that's how most people make their money by being option sellers. Okay, so when you sell a put option contract, specifically a put option contract, what you're doing is, and I'm in here, when you sell a put option contract, you are obligating yourself to potentially buy shares of that stock at the strike price level that you choose. Okay, so I want to just go over this, talk about the way that I'm viewing put selling. Okay, you only want to sell put options on stocks that you have a desire to potentially own. Do not think otherwise. So when you go into the put selling game, you need to know that number one, it's a bullishly oriented strategy, but you have to sell put options on a stock in which you would be comfortable buying shares of that stock if it came down to it. Number one, you should be bullish on that stock. And if you are, that means you want to get involved with that stock because you think it's going to go higher. And selling put options is a way to get a bullish stake into that position. As I always say, do not sell put options on stocks that you know nothing about. Okay? I'm here to tell you that is the wrong way to go about it. If you're just selling put options on stocks that you're hearing from other people that, hey, you got to sell put options on the stock, and you know nothing about that company, do not do it. Right here. If you sell puts on a stock you know nothing about, you can and probably will get hurt. So if you want to be bullish on Apple and sell put options on Apple, that's great. But you better be bullish on that stock, and you better be willing, prepared, and able to potentially buy shares of Apple, specifically 100 shares. Every single option contract consists of 100 shares of stock. So if you do not have the capacity or are willing and are able to buy potentially 100 shares of stock, you do not want to sell put options. But if you can, as long as you're choosing a stock that you know and you like and you know what the company does, then there is nothing wrong with selling put options, okay? When you sell that put option, in exchange for selling that put option, you will collect a premium from the put option buyer. Okay, you're going to get money right up front. Put option buyer pays you. And in exchange for that premium that you get right here, you will have an obligation to buy shares at the strike price level. And we're going to go over this Sofi example that I made in the last video. And I'm also going to put that video on the screen at the end of this video. So in case you haven't seen it, you can watch it there. Okay, so for those people that come at me and say, do not sell put options, it's super risky, you can lose all your money, that is the wrong mindset to go into, thinking that selling put options is so risky. Because in the end, if you sell put options and you are assigned on those put options, that means you're going to have to take ownership of the shares, and now you are an owner of 100 shares of that stock. So selling put options is no more risky than buying 100 shares outright of the stock that you're selling the put options on. You can go out and buy 100 shares of Apple today. Is anyone calling that risky? Is anyone saying to you, buying shares of stock is super risky? Don't do it. When you sell a put option, it is no more risky than buying shares of a stock, because if you're assigned on those put options, you will be obligated to buy shares of that stock, and now you become a shareholder just like any other shareholder. So is owning shares of stock risky? Should you not do it? Okay, that's up to you. But what I'm telling you, these people that come at me here in these comments saying do not sell put options because it's risky, it is no riskier than buying shares of stock. Okay. Now, I think what some of these people are coming at me about is that, as I said, most option sellers are selling the option at one price and they're hoping to buy it back at a cheaper price. And this thing right here, down here, this last line, picking up pennies in front of a steamroller, is a long time adage in the options market, where it's directed at people like me that sell like deep out of the money strike put options for smaller premiums. Okay, they think you're going to sell these out of the money put options and the stock's going to tank on you, and those put options are going to skyrocket in price, and you're going to just be in a world of hurt, and you're going to lose all your money. Once again, selling put options is no riskier than buying shares of stock. And I'm going to show you the Sofi example as well. But what I'm trying to say is, not every option seller, specifically put option sellers, their only goal isn't to just sell the option at a high price and then try to buy it back. If you're willing and able and wanting to take ownership of the shares, it doesn't really matter what that option price does in between while the stock's moving around until expiration date. All you care about as a put option seller is whether or not you will end up buying shares of that stock or not. Okay? So yes, I can sell deep out of the money put options and collect small premiums, and I can do that over and over and again. And if the stock price goes down, yeah, that option price might go up, but I don't really care, because all I care about is whether I'm going to get assigned on the shares or not. And when you do get assigned the shares, then you could hold on to those shares forever. And that stock could skyrocket, and you can make so much money, unlimited profit potential on the upside, as well as selling covered calls against those shares of stock that you now own, which brings in another source of income. So selling options and buying them back for a cheaper price, yeah, that's the goal for most of us, but it's not the only goal. When we sell put options, our goal could also be, I want to take ownership of those shares of stock. So it is no more risky than buying shares of stock outright. And picking up pennies in front of a steamroller means that, you can collect all this money, these small payments over time, and then that one time the stock drops on you, you're going to end up buying back that option and giving back all the profits that you made prior. Depends on what kind of trader you are, okay? If you're there to just get in and out of the trade, yeah, that may happen to you. But if you're okay owning the shares of stock, then you're not picking up pennies in front of a steamroller, and you're not also taking on a trade that's more risky than buying 100 shares of stock. All right, so let's go into this Sofi example that I talked about last week, and I want to show you what's happening. So we looked at, okay, here's Sofi. So it's trading, around $30 a share, and we profiled the January 2026 $19 strike puts, and we looked at an example that we were going to sell these $19 puts for 32 cents a contract. Okay, and that means you're going to get 32 actual dollars right up front in your pocket for every single option contract you sell. So if you sell one option contract, you'll get $32, and now you're on the hook to potentially buy 100 shares of Sofi at $19 a share. And if you had to pay for those shares, it would cost $1,900. SoFi's at, just under $30. You have almost an $11 cushion between where SoFi is now and at the price where you would have to execute and follow through on your obligation and buy 100 shares. If you are comfortable 72 days from now making that decision that I'm okay buying 100 shares of SoFi at $19 per share, then you are okay selling that put option. You're making a decision today for something that won't come to fruition for 72 days. So you're saying SoFi's at $30 now. I'm okay for the next 72 days with an obligation to potentially buy these shares at $19 a share. The only way that'll happen is if SoFi comes down to $19. Then you will have to buy your shares. If that never happens, then you just walk away with your $32. So what is the difference whether you go out and buy 100 shares of SoFi today at $3,000? You have $3,000 at risk. If you buy 100 shares at $19, you only have $1,900 at risk. Okay. The other thing you can do if SoFi is at $30 and you only want to buy them at $19, you can put a limit order in your broker's platform and say, I'm only going to buy 100 shares if SoFi comes down to $19. You can be sitting there forever. We don't know if SoFi is going to come down to $19, but when you sell a put option, you're basically getting paid to put in that limit order. Someone will give you $32, and if SoFi drops to 19, then you get to buy your shares. It is no riskier than buying 100 shares of stock outright. And if you're in it in this game because you want to buy shares of SoFi, then don't let anyone tell you that it is a riskier strategy than just buying 100 shares of stock. And if you're selling these things for 32 cents per contract, some people will say, you're just picking up pennies in front of a steamroller, because if SoFi drops in price, this put option value is going to go up in value. And your account will be looking at a paper loss on these options, okay, which will happen. Option prices fluctuate. If the stock price goes down, option prices will go up. So yes, if you sold that contract, you may be holding a paper loss in your account. But if you're still okay potentially buying SoFi at $19, you don't care what happens in between. All you care about is SoFi going to be above or below $19 in 72 days from now? That's all that matters. Now, if SoFi drops down to $10 a share before January, okay, well then you know that you're still on the hook to buy them for $19. And you'll be holding, let's just say SoFi drops to $10 a share. You'll be holding paper loss right now about $900. But anyone who buys 100 shares today is looking at a $2,000 loss. Okay, so once again, it is no riskier than buying 100 shares of stock at its current price. So I want to show you, let's go into the bar chart option calculator here, and I pulled up SoFi, and we're looking at these January puts, and we're going to put in the strike price of $19. Okay, and with SoFi, let's just make this around $30 a share, and the option value is at 16 cents per contract, so that's lower than, let's see, the option price was about, I don't know, maybe 36 cents. Let's put it in there. So we'll get this calculator going, and we'll bump up the volatility. So you want to see the option price match what we're seeing. So let's bring this up to 75%. All right, so let's go up to, let's say 76%, 77%. So here we go, 32 cents. Let's just use that for now. Volatility's up. Now, if the price of SoFi goes down in the next, let's just say 20 days, we'll knock this down to 52 cents. And let's say the price of SoFi goes down to $27. Okay, so now the option price has gone up a couple pennies. If SoFi drops a little bit more down to $25, now the option price is up at 56 cents per contract. So if you sold it for 32 cents, now it's worth 56. You're looking at a 24 cent or a $24 paper loss at the moment. But SoFi's only at $25 a share. Your thing is that you don't care what happens. If SoFi never drops down to $19, let's just say we go down to 10 days left, okay, before expiration. Now the thing's worth 2 cents. Even if SoFi drops down to $22 with 10 days left, it's still worth 16 cents. So As SoFi drops and its expiration date comes closer to fruition, that option price is still going to go down. Okay, look, SoFi dropped from $30 all the way down to $22, and the thing's only worth 16 cents with 10 days left. Okay, you as the option seller, you're still sitting pretty. Okay. Now, if SoFi drops down to $19 with 10 days left, now the thing's worth 96 cents. But you're still okay because you're still okay potentially buying the shares at $19 a share. And if you ever want to get out at any time because, you just don't want to be dealing with SoFi anymore, then you just buy the put option back. And in that case, if it's worth 96 cents at that time, then you will lock in a loss. Okay, you will lock in a 64 cents per contract loss, which is 64 actual dollars, whereas every 100 anyone who owned 100 shares at $30 a share is now down $1,100. You are losing so much less money than all the shareholders. Okay, so don't let anyone tell you otherwise, that selling an out-of-the-money put option for a smallish premium is riskier than buying 100 shares of stock, because it's not. It just isn't. And you come at me in the comments here and tell me, how is it riskier than buying 100 shares of stock if it is your goal because you want to buy those shares of stock? Now, if your goal is to just sell put options and you don't know what the stock is, and you're just hoping to potentially buy those option contracts back for a cheaper price and lock in a gain that way, then that's a very risky way of selling put options. I don't recommend doing that. And when the people come at me with comments, they think that that's what I'm trying to teach you. Just sell put options on any stock, and hopefully you'll make money, and hopefully the stock won't fall. That's not what I'm teaching. I'm teaching you, if you want to sell put options, you choose a stock that you're okay with and that you would be okay buying shares of that stock at a much cheaper price than where it currently trades. You know what you're getting into ahead of time. There is no gray area. There's no confusion. You know ahead of time what stock you will buy, what price you will buy it for, and how much it will cost you. Okay, so I really wanted to use this video as sort of addressing the haters here, appeasing the haters, and let them understand that there is a certain way that I'm teaching people and showing people how to sell put options, a responsible way, a smart way. Okay. So I'm sorry if I sound a little harsh here, but I'm just tired of people telling me the things that I'm teaching is super risky and that you shouldn't do it, because it's not. Listen, you can do whatever you want. Okay, you can listen to me or not. I'm here. I'm making these free videos. I'm trying to teach people things about options. I'm not telling you which stock to use. Everything that I do in here is an example. It's all about education. I'm trying to teach you how options works. That's all I'm doing. Take my time out of my day to make these free videos, all right? So I hope this has been helpful. I hope you can understand what put selling's all about, making sure that you only use stocks that you know and like and want to potentially buy, and know how much it's going to cost you, and know what the risks are. And if you ever want to get out, you can get out early before expiration. And you may or may not lock in a gain or a loss at that time. Depends on where the option is trading at that time. All right, so let's quickly go to our website, smartoptionseller.com. If you want to take a deeper dive into what put selling's all about, click on our video series here. You get about 5 hours of video instruction. You get 30 days access to our put selling newsletter. You get access to the probability calculator. Take a look, okay? You can read through the whole sales page. And if you want to know what we do here, here's our services tab. We have 2 newsletters, one of which is that we do just exactly like I'm teaching you. We sell naked put options, and we typically use strike prices $50 and under. If you want a little bit of one-on-one coaching, you need some help, consider our one-on-one coaching. All right. On the screen here, I'm going to put that video that I made last time about the SoFi trade so you can see what that's all about. In the description below is I have websites and books and software and other links that could be good for you. Take a look down there. And give me a comment, give me a like, give me a thumbs up, send me an email too. Leave me a comment, tell me what you think, okay? Because I do like to hear from you, and I do try to answer all these comments. Most of them, some of them are just, the comments are not worth me replying to. All right. So that's all from me today. I hope this has been helpful, and I'll see everyone in the next video. This is Lee Lowell signing off.